So swing trend is bullish. We have pulled back to that daily demand and we started to trickle higher so we could go higher. However, within that daily demand, what do we have? We have some clear 4-hour zones that potentially price may want to come back and mitigate, right? We can see that sell before the buy that led to the 4-hour swing breaker structure. There's some other zones within there, but they've already been mitigated, right? We've got that inside bar. We've got that next candle along there as well. Just zoom in a little bit. And then we got this here as well, right? You can see, so we had a bit of a demand chain going on there with a series of mitigations, right? Tap in, and then eventually we went. And then we have the unmitigated extreme, which is looking really nice as well, okay? Completely unmitigated, see that? So the two kind of clear 4-hour pivot zones within there, right? So let's play this forward a little bit and see what goes on. Okay, so we've impulsed down and we've come into our 4-hour demand zone. So this is where we can potentially now look to see, will the 4-hour swing trend continue? Are we going to form that 4-hour higher low? And are we going to continue to the upside? We obviously know we're within that daily demand as well. So, let's see, let's drop down to the lower time frame, because essentially what we're doing here, sort of the trade plan I'm going with you guys, is daily 4-hour and M15. And we're kind of using the M15 primarily to trade the 4-hour time frame, to trade the 4-hour ideas. So if you want to be someone who enters on the M15, which would be probably my advice for 90% of you, particularly when you're starting out, the highest strike rate you're going to have and the most probably success you're going to have is if you do it when price is in a 4-hour POI. When the 4-hour is in its most sort of probable scenario, that's when you then want to jump down to M15 and use that for timing and entries. Now you can trade the M15 and all other parts of the move, but the highest probable bits of it is going to be the turning points on a 4-hour chart, right? That's going to be the best time to then actually go and look at your execution time frame. So that's what we can do now. Now that price, because we waited and be patient, now price is in a high probable area on the 4-hour chart. Now we go look at our lower time frame, right? And that's going to be the best time. Now, as you can see, there was that big messy range here on the 4-hour chart. And we could spend some time going through here to get our M15 structure mapped exactly, because we had a break there. I'm just going to do this super quickly for you guys. If you want to dig into it more, you can. And then we had another bearish boss there, right? Swing pullback. And then we never broke and closed above that high. We wicked it twice, but we never broke and closed above. And then we did break and close below the low there. So then where's the highest point? That would be our swing high, which we then go on and break over there. Okay, and then we pull back, and then we finally break and close over here, and then we have another pullback, and we break and close above there. And we have a sharp pullback, and we break and close there. So the lowest point would be this low, and then we switch bearish, okay? So this is our current M15 swing high. Obviously you can see where the current low is. So let me just quickly delete all of that. Cool. We'll draw this on because I think it's good to just keep being systematic with you guys and take our time and show you sort of the process we go through of mapping our structures. So there's your M15 boss. Here's your M15 strong swing high. Okay. So 4 hours bullish, daily swings bullish, but the M15 has switched bearish, most likely just to facilitate the 4-hour swing pullback into 4-hour demand. Okay. Now, obviously selling off with a ton of momentum, and we now have come into our 4-hour POI. So this is an area in which potentially that 4-hour higher low could form, and we could go to the upside. Do you want to jump in straight away? I would probably advise not to, and at least wait for some solid structures to start to shift in your favor, right? We've had an M15 bearish boss. We expect potentially M15 swing pullback, and we could just keep dumping. We could come down to the extreme, or perhaps maybe even the 4-hour chart is ready to switch bearish, right? That's something you have to bear in mind. So I'm not going to try and catch a falling knife. I'm going to wait for a little bit more development, at least a bullish M15 chalk, before we can start thinking about longs, okay? So let's press forward. Right, at this moment, the minute price trades lower than a zone like that, that zone is done. This zone has now failed. If a zone is going to work, price should not trade through it, okay? It should be enough orders within price to contain price. It hasn't done so. So let's go back to the 4-hour chart and reassess. Okay, now when this happens, and I can still see that price is pretty much, within the general range, okay? Because we've refined, essentially what we've refined is that whole 4-hour demand range here, right? We've just refined it to a single candle pivot. So if price kind of trades just through, and I just delete it now because it's failed, and I then can look left and go, does it still make sense? Well, yeah, we have this candle here. Okay, it's not great because we've already had a mitigation that led to a move. So we know a decent amount of orders would have been filled, but sometimes that can happen and it can fill some orders from within the wick, and we can either get at least a tradable move before we potentially go lower, or perhaps maybe we will continue from here. So if it still makes sense, looks left, and then we get solid confirmation on a lower time frame, then yeah, I'm happy to potentially still look for a move. For those of you who are a bit further along and you're rewatching this, or you already have knowledge of liquidity, you'll know that there was no inducement here and it didn't suit liquidity. So we're not overly surprised that the zone failed, okay? If you haven't got to that part of the course yet, don't worry, but that will become a bit more obvious in future times, okay? But I thought that would be a good point to go over. So at this point, M15, right, we've had a bit of an internal pullback, okay? Not the biggest, but it's there. So we had an M15 IBOS, right? And now you can draw on sort of supply. So would I be looking for shorts here on M15? Definitely not. Okay, yes, it's pro M15 trend, but you're trading against 4-hour demand and the 4 hours bullish. So this is where you just be patient, right? Just wait to see what's going to happen next. Let it be obvious, right? Let something, happen. So we're coming to supply. So let's see, is this 4-hour demand going to hold, or is M15 bearish order flow going to stay intact? And this is where I just relax. Okay, boom. Now we've had a clear shift in structure, right? We have the M15 shifting bullish. Okay, so now we have internal structure. This now becomes our strong M15 internal low. Okay, so I'm going to keep talking about, because it can get quite easy to forget what's going on in the other time frames, right? Remember, we are, fortunately it hasn't copied down, but this is our 4-hour swing low. This is our 4-hour swing high. We pull back down to 4-hour demand, and we're potentially looking to see, is that 4-hour high low going to form? Okay. Yes, the M15 is bearish because this is our swing low and this is our swing high. So potentially it might just be an M15 swing pullback before heading lower. Okay, we never really know. But what we do know is that this is a high probable area to trade counter M15 trend and look for longs, because there's a small potential. It could be the 4-hour high low. But even if it's just an M15 pullback, right, there's loads of room to target up towards these premium levels of supply, right? So yeah, this is a good time. This is when I view it high probability to trade counter M15. You're trading pro 4-hour in the 4-hour discount. M15 internal structure has shifted in your favor, right? We didn't just jump in straight away. We didn't just jump in on a little chalk. Clear momentum to the upside, clear bullish IBOS, right? So now, and you've got a lot of room to target. So this is what I call high probability counter M15 trading, okay? It's not always going to be 100% strike rate, but this is a bit more, you're just patient, right? From 9 a.m. on Tuesday to now 1:30 p.m. So that's coming into New York Open, right? So you have to be patient that day if you're looking to get in. Okay, cool. Shift in structure. So let's look where we can enter. Okay, so typically before we know anything for flips, what would we look for? We look for the pivot that led to the break of structure. Okay, here's your zone. But now what do we know? We know a little bit more. We know about flips. This was a valid supply zone, right? Because it caused the break of that low. So price comes into supply, it reacts. Remember, the reaction is key. But what did that reaction fail to do? That reaction failed to form a lower low. So if I just bring price back a little bit, when we have this point here, this is when you have a valid flip, because if I just draw on from the top of the reaction to there, and then I put in my little FR line, okay, that is when you have a confirmed failed reaction. So at this moment, if you draw from the high of the reaction to the bottom of the reaction, okay, that is your M15 supply to demand flip, okay, because this is where the demand stepped into the market to overpower the supply zone. But remember what I said, we don't look to get in on these flips straight away. We wait ideally for the break of structure. You want to wait for that bullish IBOS, okay? So this is why when I'm looking at the market, I don't even really bother drawing this on. I wait for what I want to see first. And like I said, at minimum, I want to see the break of structure. Once that occurs, then you can be interested in, did the flip occur, et cetera, okay? So yeah, failed reaction is confirmed once you get the candle closure, but I want to wait for the structure break first. So now when I look back, this is kind of my favorite type of way. When price action sets up like this, I love it. And I'll tell you why. Because when you get that bullish IBOS, what can sometimes happen is, right, you get the internal pullback like we did here, right? Price then breaks the low, and then price can come up, and you can get a bit of a pullback, and then price breaks the high, okay? And then, oh, damn it, they've changed the way they do this. So I have to remember to double click. Essentially you get the reaction, and you push up. Okay, there we go. So when you get the bullish IBOS here, okay, and then you go, right, now I want to get long, what can often happen is you can have multiple POIs, right? There could be a zone here, and then there could be the extreme. And this is where it's tricky, because we never quite know which one it's going to be. Okay, now, can you see the difference between here is there aren't actually multiple POIs, because the reaction from supply mitigated the extreme demand. So now when I look to get long, there is only one unmitigated zone. So it makes it very easy for me because, well, this is the only zone I can enter on. So you see here what I mean? There's the extreme here, already mitigated, right? Price initiated out and mitigated it and continued on. So then we look at the next one, right? That's already had a mitigation. The reaction mitigated that demand in this candle here and pushed up higher. So now we only have one POI to enter on. Your only decision then becomes, do you want to take the whole range or do you want to refine it a little bit to the candle, right? That's the only thing you might want to hesitate over, but this is where you want to try and have in your plan what you're going to do. If you're going to take ranges or if you're going to take single candle pivot zones, okay? Cool, so there's your M15 entry, right? Hopefully that's reasonably clear. And these are the types of flips that I would like you guys to be focusing on and really thinking about, right? They're clear, it's in the recent price action. You're not kind of looking for super old price action and looking at these big ranges and looking at something that's very complicated. It's as simple as supply is created to break this low, price comes into that supply, it reacts, it fails to do its job, it fails to put a lower low, and it moves to the upside, okay? That's exactly what we have here, right? Supply is created, price comes into it, it reacts, it pushes up. That's your flip. That's kind of what I call a bread and butter setup. This is what I want you mainly to be focusing on if you find flips being a little bit confusing at times, okay? Cool. So let's see what happens. Now, here's another thing to talk about in terms of POIs. Yes, this inside bar is a fractal pullback. So yes, that is a valid M15 demand zone. It did cause the break of that fractal high. Is that the type of POI in which I'm personally going to look to enter on the M15? No, it's got hardly any confluence. It's very low probability, right? We want to look at where, this zone here, it flipped a supply zone. It led to a bullish IBOS. It's the unmitigated extreme, right? It's part of a series of mitigations. You can see if you follow the money, right? That was the last big injection of demand. And where is it? It's in the discount. So this is where you don't want to be, these can play out by all means. But you have to ask yourself, is that high probability? Is risk to reward on my side? Because you're into much higher up now. So your price has to go a lot further into these higher levels, into premium prices for you to get your reward. No, be patient and wait for here. You might not get tagged in, but that's okay. It means it's not part of your itch, right? So price comes down, now it tags you in, okay? We'll talk about management a bit later in the course, but let's just keep it simple. Say you always want to target 5R, maybe you always want to target 3R. This is what you need to find with your own testing. If you wanted more of a technical target, perhaps you could target up to premium supply, but let's just keep it simple and do fixed 5R. And of course, there's other ways we haven't talked about refining where you can enter within the zones, right? You can enter on the EQ and that can double your risk reward. But like I said, let's be consistent and just stick to the edge of zones, okay? So that's your flip zone, led to an IBOS, getting in long. Hopefully you guys can see that. Now, if you wanted to wait for a confirmation entry of this level, you'd be waiting for a bullish chock. That was the last candle to fail to break the previous candle's low. So you'd be waiting for that level there. And in this instance, I don't believe you get an entry. But you have to be a bit patient with this one. Once you're in the trade, just set and forget. Do not touch it. Let price play out through the Asia session. And then the volume starts to pick up through London. And then eventually you get tagged out of that trade, okay? Happy days. So now what you do, always reassess structure, right? We've had another bullish IBOS. We break structure to the upside here, and now this becomes our strong internal low. Okay, cool, happy days. But remember, we need to start thinking about the M15 is bearish. We are pulling back up. The 4-hour demand zone that we're within was already mitigated. Remember, I had a bit of a tap into it, so there's not going to be as much orders as if it was completely unmitigated. So maybe there's not going to be enough juice in here to fuel the move to the upside. So we do have to be wary of that, right? Because now if we mark on our premium discount of the M15 swing range, right? You can see we're above the EQ now, we're in premium prices. We have a weak M15 swing low to target. Okay, cool. Now, let's start to see what happens and wait for at least an M15 bearish change of character. Again, am I going to look for a long from here? No. If you're going to look for longs, at least let price pull back down and towards the extreme, but it's getting lower probability now, remember, because what I said is we've already likely had the pullback. We're in premium prices now. Why did the internal structure shift bullish? It shifted bullish to facilitate the swing pullback. We're now in an area in which there's an increased probability that swing pullback could form. So now, although this is a strong internal low and we could go higher, it's a lot lower probability because we could be ready to take out the low. And that's why this is a super high probability trade compared to, here, right? So this is where, that POI has nothing going for it other than it broke a fractal high. So let's be patient. Now we have a structure shift, okay? So now we have that bearish change of character, decent momentum. Where was the unmitigated supply that caused that? We have this level here, okay? So always look for it, ask yourself, is it a structure zone? If you want to know if it's a flip zone, what do you ask yourself? You ask yourself, where did that buy to sell reaction occur from, right? What caused the buy before the sell? Look left, what do we have? We have a zone here, okay? So now you can see we had valid demand, okay? Not the best in the world, but it broke the fractal high. Price came into it, it reacted, okay? Filled up those orders and moved to the downside. So from the low of the reaction to the top of the reaction, that is your demand to supply flip, okay? So you can draw it like that whole range, but we've just refined it to the pivot within there, okay? So if it helps you, I'll draw on the failed reaction line, that's where the failed reaction occurs. So as soon as price breaks and closes below that reaction, you have the flip, but we also got the chalk, the structure break right in the same candle, which is ideal. Okay. And that's a potential entry you could take. Okay. So it's pro M15 swing trend. We think the pullback may be over. We've had a bearish chalk, so that could be an entry you take. Let's just say we enter on the edge. Okay. So quite a wide stop. You may want to cover the high. It's up to you. We could cover the supply there, right? And then target this low. But we have to be wary of, if we are taking the short, the internal structure is bullish. So a chalk just signals it could be the internal pullback into the strong internal low, right? There is demand here, and we could push up higher because we haven't mitigated any actual M15 supply yet. Okay, so that's something you have to bear in mind. It's a bit riskier, right? Because we do have some demand levels down here as well that we'll have to trade through, but nothing is ever going to be perfect. There's always going to be something in the way most times. Okay, so that could be a potential entry. See how this goes. Okay, nice reaction. Fast forward a little bit. And then we get sold out. Okay, no problem. Is what it is. Trading, you're never going to have 100% strike rate. Cool. So at this point, this is when I go, okay, ask yourself, if you just delete your analysis or hide it for a minute, are there clear intentions here? I would say no. If anything, it still probably looks a little bit bullish because we've got this internal higher high, higher low, higher high. I'm kind of just correcting sideways. And now it looks like we may be going higher because this high, all it's done is broken a fractal low. There's not really much going on. So there's no trade here for me. There's nothing going on. When prices like this, right, you have to just recognize, ask yourself, is there clear high time frame intentions there? When you compare that to this, right, you see how that's clean, it's clear. There's clear momentum in the market, clear intentions. Here, what are we doing? We're chopping sideways. People are getting caught out. And this is where you can see, if you draw from the high to the low of the range, where that dotted line is, I'm just going to leave this for a minute. Stay out the middle. This is where people get chopped around and they take lots of losses. They either miss this trade and then they get FOMO the next day and then they do dumb stuff in here, right? Or they take a loss here and then you start chasing things and you get long and you get short. That's honestly one of the biggest reasons why I see people struggle to get consistent. Because I think within a few weeks, a few months, however long it takes, 90% of you stick with it. You're going to understand this and you're going to get this and you're going to know how to execute it and you're going to know when you see it to recognize it and take it. The problem is then doing the dumb stuff in here. And this is when people struggle to be patient, and that's when they knock their confidence or they think the strategy doesn't work or whatever, right? It's all about waiting for these moments. Remember what I said at the start, if you're going to trade the M15, when is the time to do it? It's when you're in a 4-hour key level, right? When you're expecting the 4 hour to do something, you use the M15 to help you time with it. There is stuff within the middle when the 4 hours not obvious where you can trade it and you can take advantage of it. It's just a bit harder and you need to recognize when to not force it, okay? That's sort of my mini lesson and rant on that. So when it's doing this is when I just chill out, okay? Yeah, you might miss out on a short or a long, but who cares? Like just let it be obvious, right? Like, there could be a short from the top of this range. You could try and long from the bottom, but like, I don't really know which way it's going to go. So why am I going to take it, okay? And just be patient. This is why I'm just waiting. Okay, now price is starting to break out. Now, if you look back, you can see, I just want to talk about it because it's an example of a flip, but it's not an example of a trade I'd want to take, okay? But I'll just draw it on so you can see it. So you can understand price action, just to give you a bit more exposure as to, how we interpret flips. So you have this demand here, okay? So this is valid demand here. Why is this valid demand? Because it led to a break of that high. Okay, only wicked it, but it's a fractal break. So price comes back into demand. If demand's going to do its job, what should it do? It should form a higher high, right? It should break that high. But it fails to do so. So it reacts, the reaction is key, and then we break and close below. So I'll draw on the failed reaction line, because remember, you draw it from the start of the reaction to where price breaks and closes below it. And now you have a flip. So you can draw your flip from the low of the reaction to the top of the reaction, and you see that's basically what you have. It's the interchange of orders. It's that battle between supply and demand. So you have demand, it's valid because it broke the high, price comes into demand, it reacts, fills up those orders, the reaction is key. As soon as price breaks and closes below the failed reaction line, you now have a demand to supply flip. We also obviously broke structure, we broke those lows, and then price comes back in to fill up that supply, and then we continue down, okay? So you obviously can refine that to the pivot as well. Is that a trade I would take? No, because if I bring it back, remember, not clear intentions. It looks obvious in hindsight, but at this moment, I could potentially see that, we're coming off the extreme of the bottom of the range here, there's demand here, we could easily just push up higher. So that's why I stay away from stuff like this, and I try and keep it, to the obvious stuff, right? Cool. So let's see what happens now, and play price forward, and we start to, really dump. Okay, I think we get a swing breaker structure. Yep, we do. Happy days. So now we have a new M15 swing range. Okay, so this becomes the highest point that broke the low. That becomes our new M15 strong swing high, right? Yeah, cool. So at this point, not really nothing going on. We've got this big sort of spiky candle. There's nothing great there. Actually, I just spotted an example of a sort of a fractal flip, which it's not something I'll trade, but it's just for you to have that deeper understanding of price action. We had this demand here, right? Price came in, it reacted, and it pushed down. So that's your fractal zone on the lower time frame, and then price came up and mitigated that flip, right? Where supply took control of that level of demand. Again, you have one here as well, but price ended up spiking up through that. But yeah, cool. So nothing here I'd really trade. This is where I'd be patient. Either wait for price to pull up to here or wait for price to revisit our 4-hour demand zone. Because remember, the higher time frames is what you're going to be focusing on. Okay, patiently look to see if price is going to come down to this 4-hour low, right? It's people doing the dumb stuff in between, like trying to short down here or trying to force things. There's nothing really going on here. Compare that, trying to trade counter trend here to here. There's nothing here yet, right? So just be patient. Okay, just chopping around. Okay, get a break of these lows. Not really a swing pullback relative to recent price action, so I'd call that more of a bearish IBOS. Okay, so got a little bit more structure to work with now. So potentially, let's reassess this and see, can we see anything going on? So we have that extreme mitigated. So zoom in a bit. And then sort of unmitigated single candle pivot would be this level here, right? That led to the IBOS. Now, this is where this is unnecessary. You don't need to do this, but you can recognize that this is also a flip, right? Because what do we have? We had demand here, right? That led to the break of that high. So price comes into demand, it reacts, fails to put in a higher high, right? Never breaks the high, and then price pushes down. So here is your failed reaction line, right? That's where it is. That's where the failed reaction is, okay? The reaction fails to put in a higher high, and then we break and close below, okay? So you can draw it from the low of the reaction, or you can refine it to the pivot, right? That's your flip. But you see what I mean? It doesn't really matter if you notice these or draw these on. It doesn't give you an extra edge necessarily. It's just, if you can spot that that's the structure zone, just so happens that it's also a flip in this instance, okay? Cool. So this is a potential area in which you can look for longs. Okay, now if you're going to short this and take this as what we call a risk entry, probably personally want to cover those highs and be a little bit wary because it could mitigate something within that wick. But I wouldn't push it too much further because remember, although you're trading pro internal trend, after that swing boss at any point we could have a deeper pullback, right? So you kind of want to look for a quick move here. Let's see how this goes. So you'd be tagged in. Again, a little bit messy here. We have had a bit of a shift there, so it's not looking great. There we go. I'd be in and out with that trade. Wouldn't push it any further than those lows really. Or if you use a fixed R, then 4 or 5R maybe you get it. But there we go. Let's just keep it relatively conservative. That's a pretty simple trade, right? Okay, now price action is really getting messy. I'd be kind of staying clear of this and just waiting for price to come into our 4-hour demand level and seeing how things potentially shift from there. So we mitigated in here. Let's see if we can start to clear out some of the structure and clear out some of the supply before we look for longs, because order flow is completely bearish at this point. Okay, let's see. Okay, big boom, shift in structure there. All right, we've got the bullish IBOS. Supply has clearly failed. Nice shift in structure. Let's have a look at the 4-hour chart and remind ourselves again what's going on. So where are we in the higher time frame? I'm just going to hide this daily chart as well, just to this daily zone, just to keep things a little bit clearer. Okay, so 4-hour chart is bullish, right? Swing pullback, swing high, and we've now pulled back into the extreme level of demand that was unmitigated. This level of demand is the last line in the sand. This needs to hold if the 4-hour swing trend is going to stay bullish, okay? Actually, also something I've just realized as well is, look, this was the extreme of the reaction leg of that flip zone. So if we look left in here, is there a 4-hour zone? Look at that, nice 4-hour zone within there. In that daily zone. Just draw on quickly. So you see that? Again, this is unnecessary. You don't need to look back and do this all the time, but it's just to show you what's going on here, okay? So 4-hour came up into that supply zone within daily supply zone. It reacted from supply, so the reaction is key. But what did it do? It really kind of failed to break that low, right? It just came back, facilitated the pullback into demand, and then pushed higher. So where is the flip within there? And this is where I think it can get very messy if you're drawing all of these on, and you don't need to. But it's essentially from the high to the low, that's your whole flip range, right? Which is what that daily zone was, which we've already drawn on. So this, if you ever hear me say the extreme of the reaction leg, that's what I mean by this, because this is the reaction leg, right? The reaction from supply. And this is the extremity of that pullback, right? That zone. And these can be really, decent zones right at the strong swing low. So, if you're going to take a 4-hour entry, this is the time at which to do it. It's pro 4-hour trend. It's the unmitigated extreme. It's a flip, really high probability. And look at that. You can get over 5R to the high, right? Now, whether it gets there or not, I have no idea. But this is the type of trade which over the course of a year, I can't give you any guarantees, but I would be extremely surprised if you went up profitable. Now, some of you, especially if you're day traders or you trade in the M1 and whatever, you can add this to what you're already doing. If you do this in just a few pairs, right? Because these setups aren't going to be super frequent on the 4-hour chart. They're not always going to come by every day, right? But if you can add 5, 6R at a time like this, 100K account, that's 5K, 400K funded account, quick maths, 20K, right? Like, you get a few of those a year. That's going to add some serious returns to your overall portfolio. And it's simple, right? Like, even if you didn't even look left, you had no idea that there was supply here, and you literally were just looking at the 4-hour structure. We've come onto the extreme. It's not mitigated zone. I'm going to set my order. You knew nothing about flip zones. You knew nothing about liquidity. You just know how to draw your swing structure and identify this unmitigated zone. This is what I mean. Trading can be very, very simple, right? Sometimes adding all these fancy bells and whistles can be a bit unnecessary. Now, again, these aren't going to come across every single day, and sometimes you're going to take losses, of course, like if you entered long on this one. But these, I'm just trying to kind of encourage you to not turn your nose up at them. If you're, I'm talking to myself here as well, get too caught up in trying to trade, the lower time frames and things. This can be a really nice addition. Anyway, so what we're doing in the M15 is we come into a high probable level in which potentially that 4-hour swing high low could form, and which potentially we may come up here. Now, it's not a guarantee, of course, because the 4-hour internal structure is now bearish, and it could just be to facilitate an internal pullback into supply before continuing lower. Because the 4-hour chart may be ready to switch bearish. Why? Because if we look at the daily chart, remember, it could be ready for that deeper swing pullback. So we have to bear that in mind, right? Now, what do we have from this level of demand? We have a bullish change of character here on the 4-hour chart. So we have even more confirmation, right? That little fractal supply has failed, right? Where that inside bar supply was, we've now pushed up higher. So now we have fresh 4-hour demand. Basically, we have a confirmation entry of the 4-hour risk entry. If you wanted to take this entry now, you've got another entry there. And now let's have a look on the M15. Let me just make sure it's appearing there. Okay, it should do. There we go. Okay. So let's play it forward a little bit. And we have that nice movement up. Okay, so 4-hour zone, M15 internal structure has now shifted bullish. So from an M15 perspective, yes, it is still bearish on the swing structure. If you didn't view this as a swing pullback, we are still bearish, okay? But remember what we talked about in the previous S&D structure zones video, where we started to look at that multi-time frame market example. There are going to be times when trading counter M15 trend is high probability, and it's when you think you're capturing the next 4-hour pro trend move, right? We've come into that 4-hour level, so this is the time now on which to be aggressive against the M15, okay? So let's zoom into this level and see, nice, clear, obvious zone. For those of you who know about liquidity, you'll see that we just about swept the previous low, so that adds a nice bit of confluence to it. Now, admittedly, this move was occurred by NFP. NFP is non-farm payroll. It's typically a very high impact news fundamental announcement for the US dollar, which we see high volatility on the first Friday of every month, I believe. And typically, I definitely won't trade the news. I don't trade around it. And I typically don't bother trading after it because it's Friday afternoon. I don't even trade New York as things stand at the moment anyway. And I don't want to hold positions over the weekend. But this was a really good price action example. And it's literally just happened as of 2 days ago. So it's good to go over it. But yeah, quick recap. 4-hour zone, we're expecting the 4-hour high low. We're expecting the next 4-hour move. Clear shift in structure. M15 internal is now bullish. Lows of risk reward to target. So let's, this can be your M15 entry now, right? That's what you could classify this as your risk entry. Again, you could enter on or within the zone. It's up to you. Quite a big stop, but you've got, you can do fixed 5R. Again, if that's within your rules, you could look to try and capture this as a 4-hour move. It hasn't drawn on the 4-hour swing high for me, but that would be where you're targeting, right? And you've got a nice 12-hour position there, okay? So what I'm going to do in this instance, I know we've only been talking about M15 entries, but for those of you who want to trade the lower time frames, now we can drop down to the M1. I'm just going to hide this so we can keep it clean, okay? So now as you're trading M1, what are you doing? You're using the M1 to confirm the M15. You're not just sitting on the M1 all day trying to see M1 flips. You're doing this to literally capture that M15 entry, but on the M1 instead, right? See how we use the M15 to capture the 4-hour entry, using the M1 to catch the M15, right? We're not just sitting on the M1 to catch M1, if that makes sense. So here you have the M1 extreme zone. So technically you could take a trade on that, right? If you really liked the position, the idea, right? Following on from that mitigation there. But let's wait for a little bit more confidence. So bare minimum I need to see for the confirmation entry is I need to see structure shift in the direction in which I want to trade, right? So that's the level and high in which I need to see to go, and obviously see that supply level fail as well, okay? Cool, so we react from demand, not do anything until we see that bullish chalk. Okay, now we have the bullish chalk. What also do we have? We have a flip. Hopefully you can see it, right? It's the exact same thing. It happens in every time frame. Price comes into supply, it reacts. The reaction is key, right? Needs to see that reaction. Price then closes above there. So this would be your FR line, your failed reaction line, if you want to draw it on, if it helps you. But remember what I said, I only care once the structure shift occurs as well. So now we have the candle closure above the failed reaction, and we have the structure shift. So now you have your flip. So you can draw it from the top of the reaction to the bottom of the reaction, okay? A little small detail I'll add, and this will, like, now I've seen the bare minimum I need to see, right? So all the let's say criteria has been ticked in the box. What will come with time and experience is maybe when you want to see just a little bit more. So for instance, you might want to see, okay, we've just wicked the high, but maybe you want to see price really commit. Again, I'm not going to tell you what you need to do. This is going to be up to you, okay? But obviously the more that price kind of goes up, the better it can be. But that's just what I'm saying. At that moment, I've had my bare minimum. You can set your order, and there you go. So you could take the whole range. Some of you might want to be a bit more refined. Again, that's going to be up to you. You're testing what you find. The more refined you are, the better the risk to reward, but the increased probability you don't get tagged in. So I'd probably advise for most of you, if the range is pretty much almost the same size as the pivot, probably just take the range, increase the amount of trades you're getting tagged into. It's probably going to be better for your psychology and your experience initially. That would be my advice. Obviously, if it's like a massive range, like if you had a big like pullback like that, then yeah, you're probably going to want to refine it to here rather than taking the whole range. But in this instance, it's pretty much the same for the sake of a couple of pips, or as people like to say, don't be a prick for a tick, just get in the trade, right? There's obscene amounts of potential risk to reward if the trade idea is right, which takes a little while, but then eventually we go, okay? And there we go. So yeah, not really too much else I can add to it, really. That's kind of everything I wanted to cover. Hopefully you can kind of see it's the same things again and again and again, just waiting for confirmation, waiting to see where that battle of supply and demand is. And there you go. So this trade hasn't fully played out. I'll just kind of bring you to where we are with current price action, how we ended the week, and we shifted bullish on the M15 with a decent amount of momentum. So it is looking good. It is looking like, obviously that's not the swing high anymore. It is looking like potentially now we have the M15 has switched bullish, okay? The 4 hour, we go back to the 4 hour chart. We've mitigated that with strong levels. The 4 hour internal structure has now also shifted bullish, which was a really good sign. If this now is going to take out the 4 hour weak swing high, right? Because now we have the internal structure and the swing structure realigned. So now what the expectation would be, because this is a strong 4 hour internal low. So now the expectation is that the internal structure should remain bullish until it takes out that weak high, okay? So it's looking pretty likely that this high is going to go at some point, okay? So we do have obviously levels of supply in the way, but what would our expectation be with these supply levels? Our primary forecast would be that they're there just to facilitate pullbacks, if any, before heading higher, right? That was it. Now, of course, again, anything can happen, right? If you react and do that, I have no idea. We work with the framework that more likely than not, that's the move we expect, okay? Only other thing I'll add to this before I let you go, I appreciate this was a long video. I'm probably going to split it up into a couple of parts just to save your concentration and listen to my monotonous voice. But this is where things can, let's just say the more you learn, the deeper your understanding becomes of price action, and the more concepts you add particularly, it can sometimes lead to paralysis analysis. It's something I'm battling with all the time. It's probably something I'll always battle with, and you probably always will as a trader. The more you learn, the more it can help boost your risk to reward, the more it can help boost your strike rate. But at the same time, you can end up just seeing things everywhere, and then you just end up not taking any trades because you want something's in the way or whatever, and it can get a bit overwhelming at times. And this would be kind of a good example, which I'll point out, right? So we know we had this daily flip range. We initially came into that flip range and we reacted, right? So even if you keep it to the range or you refine it to the pivot, hopefully some of you have noticed what we've had here. What did that reaction to demand do? It failed to break the high. And then what happened? Then we came down and we closed below the reaction. So we've actually had a failed reaction here, right, to demand. So what does that mean? Well, that means that we've had a daily demand to supply flip. So we can take it from the lower of the reaction to the top of the reaction. And that technically now is a daily flip. And it did actually also break structure because remember this was the fractal low, so it did also cause a daily bearish shock there. Let's draw that again. All right. So this is where things can start to get messy. Obviously, we can refine that to there as well, or the inside bar, right? So this is what I'm saying, right? Once you start seeing things everywhere, sometimes price action can get messy and there can almost always be something in the way. So when that happens, and this is what I say to myself every week, I have to remind myself is, what is your primary forecast? What is the more probable expectation? And as I was trying to say in the previous videos, is just focus on the pro trend stuff, the predominant overall bigger structure. That is much more likely, okay? Because this is the bullish order flow, right? We can see we have not really truly disrupted this bullish order flow yet. This, let's just clean it up a little bit, right? Yes, we've had a bearish chalk, but this is the daily demand range that has not been violated. So the refined pivot candle has been price traded lower. We have had a bearish chalk and we have had a failed reaction. But overall, like for me, the predominant order flow is still bullish, right? We've come in and now it's looking like we're going with momentum. For those of you who know liquidity as well, right? We didn't have a clear sweep. There's those low resistance highs that we can see, which price is probably going to target. So on the balance of probabilities, if I was a betting man, i.e. a trader, I would say that we're more likely to do that. But I'm also wary that we have had a flip. There is supply in the way. It did cause a bearish change of character. So there is some potential that we could roll over. And this is where trading gets tricky because you have to be able to hold both of those possibilities in your mind and either being open to trading both and just trying to, get long in the right area and get short in the right area and either take your profits quickly or kind of hedge yourself. Or now price is up here, you just, you don't want to take longs because it's against the supply. We got in long down here, we got in the time where it was on our favor, and now we just want to wait and see which way it's going to play out. Okay, but I just thought it would kind of be a good thing to talk about because it does happen. Sometimes the more you learn, the more you can end up just always seeing negative confidence the way. And it's just down to you whether sometimes people are happy, they don't care, and they're happy to trade through it. Other times people just want to sit in their hands until it plays out, and you only take the long when you're down here, and you only take the short when you're up here, and you just see how it goes. But yeah, on the balance of probabilities, I'd probably expect this to fail, and price should take out this high. Not should, but it's more likely to. But I also understand that if this holds and we roll down lower, I understand why. Okay, but I would say on all the confidence we have, especially with multi-time frame analysis, and especially now we've had the internal structure shift on the 4-hour chart, I would definitely think my primary forecast will be that we'll break up higher. But who knows? It remains to be seen. So it'll be interesting to see how this one plays out. So a bit of a long one. I probably will, as if you're watching this, you'll know, I'll probably split this into at least 2 parts. So yeah, watch this over and over again. I kind of tried to cover as many sort of parts as I could and throw in a little mini lessons with obviously the main focus being flips. But if I can end it on one key thing is don't overcomplicate flips, okay? Literally just even forget about them if you need to and just think about structure zones. Where was the pivot that led to a break of structure? Okay, that's always going to be step 1. And then it's a valid zone. And then if you want to see if it was a flip, just look back, what did we react to? Like, i.e., this is obviously a structure zone that led to the break of structure. Is it a flip? Like if you want to ask yourself, well, where did that pullback start from? Where did the sell to buy start from? That's where the reaction started from. Look left. Is there valid supply? Yes. Okay. And then we overpowered it, right? Obviously, that's a big example. Probably the cleaner example of kind of how we really use it with entries and is this. This is like textbook picture perfect was this example over here, right? Clear bearish structure. We come in, we react, we push up, right? This is the bread and butter setup. This is on any time frame. If you see that, that's what I like. Obviously, we have to pair it with all the other confidence, use it in the right area, etc., etc. But this is kind of what I mean when I fall asleep at night dreaming of flips or having nightmares of them, whatever way. Okay, this sounds a bit weird, but yeah, that's what I think of. Like that was what I would have stuck on my wall, sort of thing, as a textbook example. But yeah, I'll leave that there before I rabbit on any longer. I hope you guys took some value from that, and I'll see you in the next one.